Ladies and gentlemen, good day and welcome to the Q4 FY26 earnings conference call of Vintage Coffee and Beverages Ltd. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Palash Kavle from Nuvama Wealth and Investment Limited. Thank you, and over to you.
Thank you. Good morning, everyone. I welcome you all on behalf of Nuvama Wealth. I thank the management of Vintage Coffee and Beverages Limited for the opportunity to host their Q4 FY26 earnings call. We have with us today Mr. M. Balakrishna Tati, Chairman and MD, Mr. Sai Teja Tati, Executive Director, Mr. Preetham Roy, Group Head, Mr. Kranti Kumar Viyarkalli, Chief Financial Officer, and Mr. Jawahar Kunjivaram, Head of Sales and Marketing. I will now hand over the call to Mr. Balakrishna Tati to take us through the quarter. Thank you all, and over to you, Bala sir.
Thank you, Palash. Good morning, everyone, and welcome to the Q4 and FY26 earnings conference call of Vintage Coffee and Beverages Limited. On behalf of the management team, I thank all our investors, analysts, and stakeholders for joining us today and for your continued trust and support. FY26 has been an important year for Vintage Coffee, marked by strong financial performance, continued capacity creation, and disciplined execution, which together have strengthened the foundation of our next phase of growth. Let me begin with our quarterly performance. Q4 FY26 was another strong quarter for the company, reflecting healthy demand and improved operating scale. Revenue for the quarter stood at 165.3 crores, registering growth of 57.2% year-on-year and 9.8% sequentially. Gross profit increased to 46.7 crores, while EBITDA stood at 30.6 crores, translating into EBITDA margin of 18.5%. Profit after tax for the quarter came in 21 crores, with PAT margin maintained at 12.7%, reflecting continued profitability while supporting future growth initiatives. Coming to the full year, FY26 was a year of accelerated growth and strong financial delivery. Consolidated revenue increased by 79.3% year-on-year to 553.1 crore. EBITDA grew by 88.1% to 99.6 crores, with EBITDA margin expanding to 18%, while EBIT increased by 95.5% to 90.2 crores. Profit after tax for the year stood at 72.2 crores, representing growth of 79.8% year-on-year, with PAT margin maintained at 13.1%. Importantly, the company remained operating cash flow positive during FY26, reflecting healthy earnings, conversion, and disciplined working capital management. Maintaining a positive operating cash flow profile and prudent capital allocation approach will continue to remain a key management priority going forward. In line with the company's philosophy and balanced capital allocation and commitment towards shareholders' value creation, the board has also recommended a dividend of 15 paisa per equity share for FY26, subject to approval of shareholders. Alongside strong financial performance, FY26 was also a significant year from a manufacturing expansion perspective. As many as you may recall, the company had commissioned an additional 2,000 metric tons of capacity in January 2025, taking total installed capacity to 6,500 metric tons per annum. Building on this, during FY26, we successfully completed our brownfield expansion program, increasing production capacity further from 6,500 metric tons to 11,000 metric tons annually, representing an increase of approximately 69%. Importantly, this expansion has been completely entirely through internal accruals, reflecting the strength of our cash generation and disciplined capital allocation philosophy. The expanded capacity is now fully operational from Q1 FY27 and positions the company to support future growth while improving operating leverage. In parallel, the company has also raised equity capital for setting up the freeze-dried coffee manufacturing facility, which represents an important strategic step in expanding our capability into higher values added segments. I'm happy to share that execution remains on track, and we currently expect 5,500 metric tons annual capacity facility to be completed by Q2 FY27-28. This investment further strengthens our long-term growth roadmap and enhance our ability to serve evolving customer requirements. Looking ahead, we enter FY27 with significantly stronger manufacturing base, expanded capacities, and healthy business momentum. Our focus remains on ramping up utilization of newly commissioned capacity, executing the freeze-dried project within the plant timelines, maintaining operating discipline, and continuing to generate healthy operating cash flows while creating long value for all stakeholders. Thank you once again for joining us today. We will now open for the floor for questions. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Priyanshu with Growth X Infinity. Please go ahead.
Hi, am I audible?
Yes.
Please go ahead.
Hi, sir. Congratulations on decent set of results. I have few questions. First will be on the recent plant which got live of 4,500 metric tons. Sir, can you share what is the current utilization which the plant is operating at? Yeah, this is my first question.
Yeah. Okay. The current utilization of plant is we have an installed with the additional capacity of 4,500, which is coming to 11,000 metric tons, and we are now going in a full capacity of 11,000 metric tons.
Okay, sir. So, we can expect the plant, as we said in the earlier calls, that the demand is so much there. So, we can expect the plant to be at around 95% or 100%, for upcoming months.
Exactly. You are right. Around 95% capacity utilization will be there this year out of the 11,000 metric tons, and 95% of whatever the production which we are doing it, that entire thing will be exported because we see the visibility for the orders and sales.
That's a great news, sir. So second question will be on the recent geopolitical tensions which are taking place, and we don't see much in our EBITDA margins loss. So, sir, can you throw some light on it, how we are protecting ourselves and how because demand is so much there, but apart from that, do we have any kind of challenges which we might face if this thing prolongs for the upcoming quarters?
Yes, geopolitical situation really not had any sort of impact on our company directly, because we are not focused on a Middle East or Western Asia or any part of this place, and we are focused more in towards the Central America and America, Europe, and as well as to African and Southeast Asia, Russia. So that geopolitical situation and has no impact on our company as on today.
So, my question will be on the, as we are seeing, the rise in the prices of the commodity. So, how we manage that situation? That's my question.
Yeah, the prices will remain stable as on today. If you see the globally, the coffee prices is stable and more or less settled at these levels. But with regards to the production and input cost, more or less it remains. Yes, I agree that there is a slight increase in a packing material cost due to the geopolitical situation, which we are passing. With regards to the geopolitical situation and the impact on selling prices and the input cost. So yes, there is a slightly increase in input cost, especially the packaging material which we use it for it, metal tins and aluminium and all. So but we passed on to the customers, and our realization has slightly improved on that one. So therefore, it won't have a much impact on the.
Okay, sir. Sir, just last two questions. First is on the CapEx side, like the 5,500 metric tons which we are getting for the freeze, right? What is the total CapEx which we are incurring over there?
It is around 550 crores.
580 crores. So, and how much we have sorry?
550 crores, 550.
Okay, 550 crores. So, sir, how much we have, incurred till now?
Yeah, we have almost 150 crores.
Okay, so the, remaining 400 crores will be, in next 1 year.
Yes.
Okay. And sir, yeah.
Yes.
So you were saying something?
No, on a phased manner it will be next 1 year.
Okay, sir. And sir, just last one thing. Sir, there was a mail ID which was given in the presentation, and as an investor, when we mail over there, so not getting any response. Is there any other mail ID where we can get things offline?
It is at cs@vintagecoffee.in, but there is another email ID at mdo@vintagecoffee.in.
Yes, sir. That is the one where we post our queries, but didn't get any response. I think I've more than 4 or 5 times over there.
Oh, so which email? You have tried MDO, is it?
It's EM something.
No, I'll just check that part. Check that part, and accordingly I will again give another email ID in the presentation. All right.
Okay, sir. Thank you, sir. So just last one more thing. On the realization part, what is, do we expect any realization increase this year?
Realization, because it depends upon the product mix. This year we are targeting to a premium product like agglomerated coffee in a consumer packs. Obviously the realization will be slightly better.
Okay, so what kind of a realization? Around 2 to 3% or more than that?
Yeah, it should be in the region of around 2 to 3%.
Okay, sir. Thank you, sir. All the best for the future. Thank you.
Thank you.
Thank you. Ladies and gentlemen, you are requested to limit your questions to 2 per participant. The next question comes from the line of Harshit with Robo Capital. Please go ahead.
Thank you for the opportunity. Am I audible?
Yes, Mr. Ashok, go ahead.
Yes. So in the last call, we had shared a plan, for the freeze-dried coffee. So we were starting with the first phase that was of 5,500 tons. And in the second phase also, we were adding 5,500 metric tons. And the first phase was to commission in FY27. So is my understanding correct, or how, can you explain the timeline?
Yes, you are right. Your understanding is absolutely right. 5,500 metric tons, which is the first phase, which is going to complete, and the plans to commence the production by FY27. And then
right.
Go with the second phase. Yes, you are right.
Okay, sir. Understood. And we were going to raise some European debt because the interest rate was attractive over there. So can you, just quantify, or can you share your debt outlook for FY27 and 28?
Yeah. Just give it to our CFO, Kanti Kumar. He will share you details.
Yeah, debt component will be additionally some 300 crores will be adding to that existing debt for that FY28, and plus 100 crores is that for working capital. That is the peak debt level.
So the 400 crore debt everything, right?
Yes.
Additional 400 crores, right?
Correct.
Right. And so what is our guidance outlook for top line and EBITDA margins for next 3 years as we are, aggressively setting up a capacity? So for FY27, 28, 20, what kind of revenue growth and EBITDA margins are we targeting?
Yeah, current financial year FY27, whatever the additional capacity is coming, in that 95% we are utilizing, and price is more or less is little better method. And coming to the FY28, 11,000 metric tons of that spray and aglo coffee. In addition to that one, and some 6 months component will come with the 70% of the capacity of that freeze-dried coffee. Then FY29 full capacity of that freeze-dried coffee plus 11,000 metric tons of spray and aglo. This is that broad outlook for the next 3 years.
The margins?
Margins is current financial year is little better improvement of that last financial year. FY28 definitely the premium product is there. It is it's quite better than this FY27. And FY29 more or less is that structure will improve one.
So,
I'm sorry to interrupt. Harshit, I would request you to please come back in the queue for further questions. Thank you.
Thank you.
The next question comes from the line of Jay Mehta with Veto Capital. Please go ahead.
Hi, sir. Am I audible?
Yes, Mr. Mehta, go ahead.
Sir, congratulations on the great set of number. I have a couple of questions. First, sir, how confident you are to ramping up this utilization of 11,000 ton? So it is currently being utilized 100% from the first quarter, or it will gradually be utilized? And the second question will be about the sales order pipeline of the FY27. Thank you.
Yeah, thank you. Mr. Mehta, it has started at the full capacity utilization of the 11,000 metric tons. And first quarter, of course, we are going to use on full capacity. Having said this, because normally first quarter is we take some sort of maintenance, because yearly maintenance we take it. That will be around 15-20 days. That there will be some loss of production of this 15-20 days annual maintenance. But otherwise, it will be full production capacity. But with regards to the Q2 and onwards and all, it will be fully utilized, and the whole year it will be still remains 11,000. But we are expecting around 95% of the full capacity utilization. Out of this 95%, which comes to around approximately around 10,200 to 10,400 metric tons. So we do have the visibility and some sort of commitment from the customers, and we are confident that we should be able to complete this.
Could you please able to help us with the approximate percentage of that total capacity, like 40% or 50% commitment you have right now on the first quarter of FY27?
Yeah, okay. It is an ongoing process. No? To be frank, actually, this quarter we have the commitment for the total, because this is, as I mentioned, it's a lean period, basically. So we'll have around 70%, 75% of the total sales this year of the projections. But next quarter, actually, as a Q2, in fact, we got a full capacity the sales. The projection should be in the region of around, as I mentioned, that it is around 2,400 tons, which we are going to sell it in the second quarter.
Okay, sir. And just the last question, one very small. Sir, the top line guidance for FY27, if you could please provide.
Yeah. Yes, Kranti Kumar will give you details.
Coming to the FY27 top line guidance, is our capacity of the 11,000 tons, almost 95% will be utilizing. That will be the guidance. And price perspective is whatever the realization is there compared to the FY26, it's a little better kind of thing.
Okay. Thank you so much, sir. Thank you.
Yeah, thank you, Mr. Mehta.
Thank you. The next question comes from the line of Raj with Fident AMC. Please go ahead.
Yeah, thank you for the opportunity. My first question is, again, slightly on realizations. So despite the coffee prices now almost 25 to 30% lower than a year before levels, so do we still see the realizations improving from here on, mainly because of our aromated coffee increasing in as a proportion, or it could be flattish if the coffee prices continue at these levels?
The coffee prices will continue to be this level. This is what we are anticipating. A. B is that yes, the realization will be slightly better this year, as we are going to increase the products mix for more focused on the consumer packs as well as the premium product like granulated coffee. So obviously there will be a slight improvement in the realization.
Second, sir, on our working capital now, at these levels of coffee prices, do we see further improvement in our working in inventory and receivable days from here on?
Hello. Yeah, definitely. Coffee bean prices it's coming down. Definitely working capital days will reduce, and it will directly impact on operating cash flows. It will be positive side. It will more grow.
So FY27 should also be positive. And I mean, as a ratio, what could be our
H1 FY27 will be, because since it's that Q1 is that a lean season kind of thing, it is little negative kind of thing, but Q3 and Q4, it will be positive. Overall, FY27, definitely it is a positive cash flows from the operating cash flows.
understood? Understood. Okay. And so lastly, on our debt level, so what kind of debt for FY27 we should assume, and what would be the interest rate?
FY27 debt level is more or less of that FY26, a little of maybe 30-40 crores will be adding. And debt interest rate will be that something like 8.3, 8.4%.
Okay. Okay. Thank you so much.
Thank you.
The next question comes from the line of Ankush Agarwal with Surge Capital. Please go ahead. Ankush Agarwal, your line has been unmuted. Please go ahead with the question.
Yeah. Hi. Am I audible?
Yes.
Yeah. So can you share the volume data for the quarter? Because the presentation has not been uploaded. We don't have the data for the quarter.
Volume?
Yeah.
Sorry?
Typically, in a presentation, we always give capacity and utilization for every quarter in terms of volume.
Yeah. Okay.
Our volume is, I think it's up to Q3 is already there. Q4 is at 1824 metric tons. Since that 7 days, this new capacity also came. So
Right.
1924 is that sold quantity.
1824, right?
1924 Q4.
1924. Okay. So second thing that I wanted to ask is, in terms of this FDC plant, earlier the target was to commission this by March 27, and we were expecting 60-70% utilization in FY28. Now the commentary sort of indicates that it will be commissioned by Q2 FY28, so around 6 months delay. So is that the correct understanding, that we have seen a delay about 6 months for this?
It's not a 6 months kind of thing. For March 27, we will be completing the commissioning, and the first 3 months will be the trial. July
Right.
27 onwards, definitely commercial operations will start. So basically 9 months of operations with the 70% capacity we'll be utilizing for FY28.
Okay. Okay. And lastly, I think one of the commentary earlier was that we want to keep or sort of improve our small packs, consumer packs from current about 50% to like 60-65%. But now that we have expanded our capacity from 6,500 to 11,000 metric ton, in order to keep that ratio or improve that ratio, we will be needing to increase the packing line as well, right? So are we looking at that, because packaging is about 3,000 tons at the moment?
Yeah, definitely. Packing line also we expanded. Now that packing
Okay.
capacity also improved. And this financial year will be that in the ratio of 40-60 ratio will be doing that 40% is the bulk and packed form is the 60%.
Okay. So what is the packaging capacity currently?
Currently packing capacity is at 5,000 and one more line also we are adding that will be to match with that 60% of the capacity. Current packing capacity is increased to 5,000 metric tons.
Okay. Got it. Got it. That was helpful. I'll get back in the queue for further questions.
Thank you. The next question comes from the line of Onkar with Shree Investments. Please go ahead.
Hello.
Yes, sir, you're audible. Please go ahead.
My question is regarding, if my understanding is correct, so for current year, you will be utilizing 95% of the 11,000, and for next financial year, you will be utilizing 95, like full capacity of 11,000 plus 70% of the 5,500, correct? So basically, if my understanding is correct, you are saying for current financial year, you will be utilizing 95% of 11,000, and for the next financial year, you will be utilizing all 11,000 plus 70% of 5,100, which you will be commissioning in July, right?
Yes, you are right. So
Okay, and what? Yeah, please go ahead, sir.
approximately it will be around 11,000 plus 2,500, maybe around 13,570 tons you can able to, yes.
Okay, and what about the remaining 5,500 which you are talking about? What's the plan for that, sir?
So that will be coming in FY 28, 29.
But that will be commissioning in FY29, right?
No. You are not missing. See, 11,000 tons right now we have the capacity out of which we are using 95%. Okay. So assuming that even we commission the FDC plant by FY27 Q2. So and FY26, 27 typically. So that production which is coming from FDC is approximately 2,570. Yeah, 2,570 to around 2,600 metric tons. So with that totaling is around 13,600 to 13,700 metric tons, including spray, aglo and freeze-dried coffee. So this will be FY 27-28, right? And FY 28-29, FY 28-29 you will have the 11,000 metric tons plus 5,500. 5,500 maybe we will have around 90% capacity utilization. So where it is coming approximately 4,500 to 4,700 tons, which is coming, adding to 11,000 tons comes to around 15,500 metric tons.
So in FY28, there won't be any contributions from the other part of 5,500 which will be coming, right?
FY28 will be there, no? That's what I said that 2,600 tons will be coming. Yeah, sorry?
No. I was asking about the remaining part of the 11,000, not the first 5,500, but the second part of 5,500. That I was asking.
Yeah, that is a phase 2. You're talking about the phase 2 of the field.
Correct. I'm asking about phase 2. Yeah, correct.
That will not be there in the FI. Yes, that will not be there. That will be there in the 29-30th.
That's 28-29, right?
Sorry, not 28, 29-30.
Okay, 29-30. So, yeah. And, have we started anything for that? Like capex or anything? Not, right?
No. But the land what we acquired and the building what we are making is we are making such a way so that the second line also is readily available, so that we can bring it straight away and we can able to commission it. So that steps and all we are taking now.
Okay, thanks. Second question is on the margin front, sir. This quarter you have done around 18.5%. So, a steady state basis, what is the margin we can expect with the retail packaging going up, and also you might get operating leverage because of the of utilizing capacity at optimum utilization. So, where do you see the margins in 2 years now?
Yeah, it will be in the region because 18.5 right now approximately around 18.5. It will go another 0.5%, can go up to 19%. 19%. And if we are going with the consumer packs and all, where we have additional another 2%, which we mentioned to you earlier also.
So it should be upwards of 20% EBITDA margin you are targeting, right?
No, 19% it will be.
Yeah, but 0.5% will be added because of this thing, and 2% because the consumer pack you said, right?
No, but the 18.5% is already inclusive of the consumer packs.
Oh, okay, but there will be an increase. Sorry.
This is an average percentage. 18.5% is an average of bulk and consumer packs.
Okay.
So in addition to that, we are taking the leverage of the capacity utilization of 11,000 metric tons. Another 0.5% will add it to it.
Okay.
Yeah.
So for example, for the debt part, you will be taking 400 crores of total debt, right? For work.
Yes, please.
And for that purpose, how much finance cost can be added for this particular financial year?
out of 400 crores debt, is 300 crores debt is at cost of around 5 to 6 percentage, and 100 crores is then in the range of 8.4 percentage.
Thank you, sir. The next question comes from the line of Randeep Singh with Randeep HUF. Please go ahead.
Hello.
Mr. Randeep, your line has been unmuted. Please go ahead with your question.
Hello, sir.
Yeah.
Thanks for taking my question, sir. Hello.
Yes, you go ahead, please. Yeah.
सर मैं ये जानना चाहता हूँ कि FY28 तक 29 तक तो कैपेसिटी एडिशन और यूटिलाइजेशन तक ठीक है, लेकिन FY30 तक और 31 मतलब मैं 4-5 सालों के मतलब हिसाब से नजरिया चाहता हूँ कि फर्दर कंपनी में वैल्यू एडिशन या कैपेसिटी एडिशन हो करके मार्जिन कंपनी अपना बढ़ाएगी या फिर कैसे करेगी?
यस, आप सही बोल रहे हैं कि देखिए 29, 30 एंड 30, 31 ऑब्वियसली बिकॉज वी विल हम लोग के पास रहेगा कि एक फ्री स्टेट कॉफी का 2 लाइन रहेगा, यहाँ पे 11,000 टन एडिशनल फ्री स्टेट कॉफी का लाइन आएगा विच इज ए प्रीमियम प्रोडक्ट एंड वो उसका रियलाइजेशन तो इट विल बी हायर ओनली. So obviously the realization is higher and the margins also better. Improved margins you will find it because your company is going to produce a premium segment product which is in a free state coffee within almost double of the capacity what we are going to have it now. So obviously the realization and margins will be better.
Thank you, sir. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your questions to one per participant. The next question comes from the line of Harshit Pandey with Blue Star. Please go ahead.
Hello. Am I audible?
Yes, Harshit, go ahead.
Yeah. First of all, congratulations for good set of numbers. So my question is, what type of margins do you see in FY28 after the freeze-dried capacity we get?
Yeah, it should be in the region of around 20%.
20%. Yeah, we can target like 21, 22. Yeah, it would be around 20.
Yeah, it depends because if we are going to take the 9 months production for the freeze-dried coffee, 8 to 9 months production, obviously it will be in the region of around 20-21%. But going forward, if 29, then it will be much better. It should be in the region of around 22 to 24%.
Got it, sir. And for this year, we are targeting 19% of EBITDA, right, sir?
Around approximately. Yes, you are right.
Thank you. The next question comes from the line of Paras Cheda with Purple One Vertex Ventures. Please go ahead.
Thank you, sir, for this opportunity and congratulations on the set of results. I think most of my queries have been answered, sir. There's only one thing, any thoughts on, getting into that retail chain that we were trying to build through? So, I mean, any developments on that?
Right now, we don't have any plans to enter into the retail market at this point of time. But yes, we are now focused a little bit on selling our product through the e-platform. I think that we will try to strengthen it because India is also one of the leading consumers of coffee now because of the way the Indian coffee consumption is growing. So sure, we are going to focus more on e-commerce platform and try to have a presence in the local market.
Thank you, sir. The next question comes from the line of Arya with Nuvama Wealth. Please go ahead.
Hello.
Yes, Arya.
Yeah. Congratulations on a great set of numbers, sir. Can I please have the sales mix split geography-wise? So as you've mentioned in your previous presentations.
Yes. Okay. One second. Mr. Javagar, our Director Sales and Marketing, he will give you more detail.
Hello. Hi.
Hello. Yes.
So over the last 8 quarters, we have actually broad-based our sales space. So currently, the mix would be like, in the Africa region will be about 31%. CIS and Russia will be about 22%. Southeast Asia would be around 22%. Americas and Europe would be around 18%. And about 5% local sales would be there.
That's it from my side. Thank you, sir.
Thank you. The next question comes from the line of Jaitar Joshi with Ibisu Investment Advisors. Please go ahead.
Hi, sir. Thank you for this opportunity. Sir, could you please share the EBITDA per kg for this quarter and how it compares with the previous quarter?
Q3, Q4 is that our top line is almost increased by the 9%, and the bottom line is increased from 19 crores to 21 crores.
Sir, I wanted to know about the EBITDA per kg, sir.
Okay, sorry. EBITDA per kg is Q3 to Q4 is almost a similar case, and quantity is increased more. So we sold almost 1924 metric tons during the Q4, as against 1802 metric tons in Q3. So EBITDA per kg more or less is similar.
Okay, understood, sir. And sir, I had another question. I was not able to understand your response. We said that the realization per metric ton will go up, even though the coffee prices are declining. So I was not able to understand why.
One is our product mix is there. So because of the product mix, our realization is increasing. And second point is, even though coffee bean prices is slightly increased, that whatever the deficiency is there covered with the product mix. That's what our MD explained.
Okay, but so there is no relation to the underlying coffee prices then?
No relation between that.
Thank you. The next question comes from Ashwin Patil with Prosperity Bank. Please go ahead.
Hello.
Ashwin? Yeah, please go ahead.
I'm audible?
Yes.
Please go ahead.
I want to know which global coffee price should we track to understand the impact on your raw material cost and margins?
Your question is which global prices you are saying, right?
Coffee price should we track to understand the impact on your raw material cost and margin?
Yeah, these are the prices which is traded in London terminals and all. So it can be seen from the website, the prices of the Robusta and Arabica. So from there it is easy to track it or the price levels.
Okay, sir. Thank you. And my second question is...
I'm sorry to interrupt. Ashwin, I will request you to come back in the queue for further questions. The next question comes from the line of Karan Gupta with Asit C. Mehta Investments. Please go ahead.
Yeah, hi. My question is regarding to the realization part again. Bear with me for the long question, but I just wanted to understand the realization part, which is the profitability metric that you use. Realization per kg, I mean,
Sorry to interrupt,
revenue
sir.
per kg.
The line for the management has been disconnected. Please wait while we reconnect them. Oh, yes, sir. The management has been reconnected. You can proceed with your question. Karan?
Yeah. Hi. So, my question is regarding the realization part. Uh, uh, As if I calculate the EBITDA per kg, so, for the quarter, EBITDA per kg is 159 rupees per kg, right? EBITDA, as per your 1924 of metric ton production for quarter four, right? Uh, I can see that the growth in EBITDA per kg, since last 3 to 4 quarters, it is in 22% something, more than 22% something, right? And your realization revenue per kg is something around 15 to 20%. So what is the operating leverage that you are getting from here? Is that the coffee prices in last 1 year has increased significantly, or it's something we are getting operating leverage from our plant utilization part and all this thing. So just wanted to understand this EBITDA per kg part and how it will move from here on for next, let's say, FY 28, as we are also moving or expanding our capacity. So how you are seeing this trend? You also must have calculated the EBITDA per kg part internally. Historically, what was the trend? Just give some color on the EBITDA per kg part for the next 1 or 2 years, how it will going forward.
Can you repeat?
I don't know. Okay, sure. So my question is again on the realization part, EBITDA per kg. So if I just calculate EBITDA per kg for the quarter is 159, right? As you said, 1924 is the production, right? And if I calculate the last 3 quarters consistently, I can see that more than 20% of growth on the EBITDA per kg, right? And before that also 10% or something, 19% in quarter 3 FY25. Now I just wanted to understand how it will move from here on, because your realization per kg, which means revenue per your production, is also in a good status, which is more than 15%, right? And your EBITDA per kg is growing faster than that. So now just wanted to understand how much operating leverage we will be in the FY 27-28, and how it will move forward in terms of this EBITDA per kg. And this has happened also because of the prices of coffee has moved up. Yeah. Just give some color on the EBITDA per kg going forward, how it will move.
EBITDA per kg depends on the 2 factors. One is the realization. The realization is increasing because of the product mix. So, and again, that customer blends, different customers is having different blends. Based on that, EBITDA per kg is increasing. So if you see that last financial year, we improved that lot to that packed form. So almost 35% to almost 53% we went to that packed form. That is the reason there is a growth is there in that EBITDA per kg. That is in FY26. Coming to the FY27, so this further little growth is there in that packed form. So definitely that further it will increase 5-10% here and there.
Okay. So 10% we can assume because of the customer blend product mix. Going forward, the 10% will be our overall realization growth, and that is included the coffee prices or the raw material prices increase.
Ours is a cost plus model, so basically it does not have an impact on the coffee bean prices. But definitely, if the realization is more, that the EBITDA also slightly is better. But basically, this is the customer blends and the product mix only majorly driving this EBITDA per kg improvement.
Okay. Thank you very much.
Thank you. The next question comes from the line of Mahesh Atal with Daria Investment Advisors. Please go ahead.
Sir, I could see a sense of optimism in your voice when you say that you will be effectively able to sell everything that will come online in next financial year. What gives you that confidence that you'll be able to ramp up the sales very fast? First thing. And second thing, if you just elaborate more on this freeze-dried coffee competitive landscape, that would be helpful, sir.
Thanks, Mahesh. Thank you. No, it's not a really optimizing, but it's the fact is that, we are very confident because the customers what we have and the markets what we are focused now and what we are selling. I think these markets is easily can able to absorb the quantities what we produce. So that makes me a lot of different to talk in a very confidently. A and B is that we do have some sort of visibility from the customers that what they are going to buy from us for the whole year.
And then on the competitive landscape, sir, on the freeze-dried side?
On the freeze-dried side, as I mentioned to you, that we do have, because the freeze-dried coffee market is growing surely, and our capacity is hardly anything 5,500 metric tons, neither here nor there. So I'm very confident that it is easily we can able to not even sell 100% if we can able to produce, but we can even look for to ramp up the capacity by adding one more line also.
And what would be the additional capex that you would need for the second phase?
Yeah, I should be in the region of around, because since the land and building is already available, because we are now taking care of the second line also in our land and building. So obviously it should be in the region of around 370 to 400 crores.
So basically, if I look at phase 1 and phase 2 both, so that means additional 400 plus additional 400. So 800 crores of capex would be done in next 2 or 3 years. Is a fair assumption?
Yeah, it is right now the first one is around 550 crores. The second one is...
But you have already done 150 crores is what you have said, right?
Yeah, that's what. Okay, after you are taking out that. Yeah, you are right. Then your assumption is right, correct. So it should be around...
Basically, you are yet to do 800 crores. And on your assumptions from your own numbers, sir, how much of this would be from internal accruals and how much would be the borrowing if I take the second phase also?
Oh, no, second phase at this point of time very difficult for me to, because we are going to... internal accruals is difficult because we may have to go for the ECB only.
Thank you, sir. The next question comes from the line of Abhishek Bankar with Genuity Capital. Please go ahead. Abhishek, your line has been unmuted. Please go ahead with the question. As there's no response, we'll move on to the next question. It's from the line of Nidhi Shah with CR Kotari. Please go ahead. Nidhi Shah, your line has been unmuted. Please go ahead with your question. We'll move on to the next question. It's from the line of Amit Mandale with Robo Capital. Please go ahead.
Thanks for the opportunity. So my first question is on our customers. So currently, could you add some color, like how many customers we have, or, top 5, 10 customers contribute what percentage to the revenue, etc. And secondly, was also keen to know our go-to market for FDC. Like, are we going to sell the same customers or we have different customers? Some color on that.
Yeah, right now we have around 19 to 20 customers are there. Complete globally, if you see that in all segments, all regions and geographies, and out of which, the top 5 customers, 5 to 6 customers contribution is approximately around 45 to 50%. And the freeze-dried coffee, what we have is that, yes, we are going to sell to the existing customers, also new markets and new customers.
Okay, great. Thanks.
Thank you. The next question comes from the line of Atharva Kulkarni with OHM Group. Please go ahead.
Hi, thank you for the opportunity. So a couple of questions here. If you look at our sales growth for the past couple of years, we So do we expect to maintain the same trajectory for the years ahead? That's one. And second, for the additional debt that we are taking up, so do we expect what is the source of funding that we expect for the debt? So what will be the servicing cost for us?
But just I'll give to my colleague, CFO.
Project cost is that 550 crores, out of which already around 300 crores we will be taking ECB. That is at the cost, finance cost of 4%, including hedging cost, it is at 6% kind of thing. Then working capital 100 crores is that with the cost of 8.3% is interest rate.
So, sir, understood. And on the first question, do we expect to maintain a similar growth trajectory in terms of our revenue?
Yeah, similar performance.
Thank you. The next question comes from the line of Vineet with Toro Wealth Management. Please go ahead.
Hello, sir. Good afternoon.
Good afternoon.
Sir, my question is with respect to the industry dynamics.
I'm sorry to interrupt, Mr. Vineet. Could you please use your handset?
Is it fine now?
Yes, thank you.
Yeah. So my question is with respect to the industry dynamics and your broad vision with this company. I mean, first of all, if you can tell about what is the global production of the coffee and how much of it is being catered by India and what market share do we have and what we envisage to have market share from the Indian product.
Good. 1 second. I'll just give it to my colleague. He will explain.
Hello, this is Jawahar, Sales and Marketing. I think you were asking a question about the global consumption of instant coffee, right?
Yeah, what's the overall production in the world? And out of this, what is Indian?
The source that we have. Currently, the total production of instant coffee, including freeze-dried, is close to 10 lakh kgs.
Okay.
And this is expected to grow at the rate of, every year about 30,000 kgs extra.
30,000 kgs extra every year.
30, I'm talking about that, not 30, 30,000 kgs.
Okay.
Thank you. The next question comes from the line of Ishan Modi, an individual investor. Please go ahead. Ishan, your line has been unmuted. Please go ahead with your question.
Yeah, your voice is not audible. Can you speak a little louder? Hello? I'm not able to audio. Can you speak a little louder, please?
Yes, sir. The next question comes from the line of Hemant, an individual investor. Please go ahead.
So thank you for providing me the opportunity. Sir, actually, I was expecting some better sort of numbers from Q4. Anyways, sir, is it fair to assume that Q1 FY27 will be better than Q4 FY26 because the additional 4,500 metric tons of additional capacity of spray-dried coffee will be there for the entire 3 months?
Yes, it will be better than the Q4. Yes, you're right.
Okay, sir. Thanks a lot.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
Yeah, thank you very much. And once again, thanks Nuvama for organizing the earnings conference call, and thanks to the each and every analysts and the institutions, and we had a very good fruitful discussions and all. Thank you once again.
Thank you. On behalf of Nuvama Wealth and Investment Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.